Yeah, Jim, I saw it. I'm just not allowed to give legal advice like that. Yeah, as you may imagine, it's a very sensitive area. Yeah, there you go. Yeah, I was just saying, man. Yeah, it's just a very sensitive area, and I can't give you any legal advice or any advice, really, to compliance and so on and so forth. Yeah. Sorry, man. All right, everybody. Let me get all this set up. I gotta move this to that spot. All right. Good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. Gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. I'm trying to get comfortable. Am I slouching? Anywho, welcome to Forex.Today. Yeah, another great opportunity to take a look at the world of commodities and currencies. So let me know what you want to trade today. Das gut, ja. We can go over dollar pairs and yen pairs. We can look at the pound. Yeah, the Bank of England raised by 50. The Central Bank of Norway raised by 50. The Swiss National Bank raised a bit. Pretty soon we got weekly jobless claims. Cool, man. We got lots of things going on. Leading indicators. That's coming out today. What an amazing opportunity to be alive and to be a trader, huh? Yeah. So let me know how it can help. That's my raison d'etre. We can do commodities. If you want to do gold, oil, and Bitcoin, I'm open to that. If you want to look at the stock markets, we can do that. So you're the boss. Huh? You're the boss. Yeah, yesterday I spent several hours at a food bank, a big warehouse, helping to feed families in my community. That was fun. So for those in my day trading group, that's why I wasn't there yesterday. The organization feeds an amazing amount of people. In fact, it's quite amazing. So I was very happy and privileged to contribute to the mission that they're doing. Thank you, Midwest Food Bank, for the opportunity. Sky Killer says Powell speaks today too. Yeah, but he already spoke yesterday. So what Powell said yesterday was they fully expect to raise interest rates again. Cool. Well, we already knew that, but maybe other people didn't, so that's cool. So, yeah. So anywho, in the description below the video, there are links to resources, and the links are there for you. They're resources for you. Angel says, I'd like to know how you're able to predict price targets for currency pairs weeks and months in advance. Hey, yeah, great. The easy answer to that, Angel, is, well, that's what fundamentals are. But I don't have a quick and easy answer like, oh, this is how you accurately predict the future. How about 30 years of investing experience? Well, that's a good start, right, Greg? Greg's got 30, maybe more. So anywho. So those resources, there's a link to my book. There's a link to a free webinar. There's a link to live trading groups. There's a link to training videos. There's a link to a foreign exchange broker. Lots of resources. It's up to you to take advantage of them. You love them or you don't. I don't know why you would not want to take advantage of them. Yeah, just super amazing. You know, you say like, Wayne, I don't know how to trade. Okay, well, join FX Bootcamp. Done. I mean, fixed. You're like, I don't understand fundamentals. I don't understand monetary policy. I don't understand macroeconomics. I don't understand the difference between day trading and swing trading. Moving averages I get, but pivot points I don't. You know, all that kind of stuff. Dude, $88 just fixes all that. I mean, done. Problem solved. So that's the same amount of information. Like it took a decade, maybe more, to get that kind of information. Right? There's a great example. Or you need a foreign exchange broker. Tradersway.com. Go check them out. They're good. That's an otherwise very challenging process. How do you choose a broker and all that kind of stuff? Well, they earn my loyalty and respect, and if that carries any weight, go check them out. Do your own due diligence, but check them out. Put them on your list. Oh, well, that's very helpful. I know. Oh, Wayne, I don't know how to do macroeconomics, and even if I knew how to do it, I don't know how to make a decision about whether it's an opportunity or a threat. Oh, QuantBox solves that problem. It's done. Your problem goes away. Now you can get on to being a success. So check out those resources. I'm telling you. Good. It's good. Boom, 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 boom. Greg's like, my dad was a stock and bond broker. That's very cool. Yeah. Was he in a big city? Did he wear a top hat? Greg's like, right? He's been in the business forever, and he knows Trader's Way is good. Thank you, Greg. Yeah. San Diego. Uh-huh. Yeah. All right. That makes it interesting. Yep. All right, cool. So here we are in the world. Hang on, I'm going to lower my seat a different way. Let's try this. Ooh, that's interesting. Lock that in. Oh. Oui. This is interesting. Yeah. All right. My coffee maker's screaming at me. It's saying it's at vacuum. I use a Japanese vacuum coffee maker. And I think it's ready. Anywho, could use more coffee. All right, so let's start with what do you want to do? Exotics? No, let's start with the stock market. Boom, 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 boom. More down. We've been bearish on the Dow now for, basically all week. We crossed over the zero lag 21 on the Dow Monday, Sunday, Friday. Very cool. We've on the S&P500, which is over here. We've gone from two standard deviations to one standard deviation. Kind of. It's not really that, but you can think of that. Like it's still bullish, but it has come down quite a bit. FTSE, Yeah, also down. So notice down, down, down during this period. Let me give a couple clicks in. Okay, down, down, down. Do you think these markets are correlated? Do you think there's a relationship? Even the Japanese stock market has done that head and shoulders we talked about 10 days ago now. 10 days ago, I think. I mean, quite a while ago. And what happens now matters a lot. I mean, if it makes a lower low, I mean, it matters a lot. And the thing is, most traders, they just keep doing what was working and they never know when it's going to end. Well, there's some pretty reasonable wink, winks, nudges here. Okay. And it's technically bearish and maybe make a lower low, which would then, yeah, really be amazing. Okay. This is the German stock market right into the monthly target. And it was down Monday, down Tuesday, down Wednesday, down Thursday. Right now it's Thursday, and it was already way, way down here. Of course, let me update these. Boo, 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 boo. Boom, 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 boom. So we've already hit our target. You see, perfect little trade. Like let me draw it for those that don't know. Okay, this is the sell. This was the target. So let me do this differently. Let's change the color, and I want a box. Okay, this was the sell on Monday. This was the target for Monday. This is the sell on Tuesday. This is the target for Tuesday. This is the sell on Wednesday. This is the target on Wednesday. This is the sell for today, and this was the target for today. Okay. And yeah, probably like something like that to finish off the week. Or if you take it another step further, this was the sell zone for the week. This was the target for the week. So you would now ignore this and take the rest of the day, take the rest of the week off. You're done. You hit target on London lunch, which was several hours ago. Huh? And now it's time for you to spend some time on yourself. What are you doing Friday? Manny Penny? Manny Petty? Yeah. Oh, you don't work. You don't need to work Friday. You're done. Okay, that's another way of looking at it. So you have your sell Monday. Bear in mind, all of this is the projected high for the month. So getting short here is not crazy. It's not certain it's going to fall, but it's not crazy either. And then you have the lower low, lower high, lower low, lower high, lower low, lower high. And remember, this is the projected out, so you're done. This was the projected high for the month. This is the projected low for the week. You're done. You're done. Escucha! So anyways, that's enough, right? It's enough. Cool. I need to get a coffee. I need a reload. Looks like the coffee is done. Be right back. All right. Ja. Das ist gut, ja. The Seven Nation Army can't hold me back. All right. That hammer candlestick, though. Is that right, Sky Killer? Are you sure? Yeah. No, Sky Killer, I think you're wrong. No. All right. All right. All right. Let's take it further. Bitcoin, I would suspect, is done. Ooh, that coffee is hot. No, I think you're mistaken, Sky Killer. I think you're mistaken. Wasn't me. Ni hao comes. Ni hao. Ni hao ma. All right. How do you stay dedicated since none of my friends know about markets? I don't know. It's like, how do you ask the fish, why do you like swimming so much? I don't know. Not sure how to answer that. I don't know. This is, yeah, beta. Well, there is a theory too, isn't there, that you're the sum of your friends kind of thing. Isn't there someone that says you take the net worth of all your friends and you average it, and that's probably what you'll do? So you want to get richer, you get richer friends. Is that it? So the wolf says sold Bitcoin at 3,300. Okay, that's cool. Beautiful trade. And you say you did it because it hit M4. I just want to be clear, since you volunteered, this doesn't mean sell. It means take profit. But you can stop hunt for sure. Okay? Yeah. So if you mean you sold out, you took profit. Yeah, sweet. Nice play, Wolfpack. Either way, even if you're stop hunting, that's perfectly fine. I mean, yeah, nice trade. Okay. Yeah. So right on. Yeah, it's interesting that you bring that up about the friends, and then we continue the thought process of your net worth is going to be the average net worth of the people you hang out with, and by randomness, I guess, I was exploring real estate in Monaco yesterday, and there's only like 24, maybe 30 apartments for sale in Monaco. It's pretty interesting. Not a lot of real estate for sale there, but yeah, it's a great way to meet people with higher net worth. It might be easier to just rent a place, huh? I think I would enjoy Singapore better. Singapore has a mix of cultures and classes, like income levels and stuff. So you could stay, you can hang out in very high end areas and live a very sort of billionaire's life. And then the street food, though, the street food in Singapore is fantastic, right? Night Owl says, how do we get your MT4 template? You join FX Bootcamp. So you go to fxbootcamp.com, fxbootcamp.com, and you join. It's $88 a year, and it's included for free. Not for free. It's included in your $88 membership. because I'm cool that way. All right, so anyways. But wouldn't it be a fabulous life where you split your, you live, but you travel from Monaco to Singapore and back? That's what you do? Cool. All right, so gold making its next move down. Remember, we've been talking about this dropping to 1,800. 1,800? Yeah, 18, a life to go. Yeah, crime is time. Cool, right? Cool beans. Technicals are working because fundamentally gold should be up. I think gold should be down. Why do I think gold should be down? We're in a disinflationary period. So yes, dollar is not as strong as it used to be, although it may be getting stronger again. But there's no reason to own gold. That's the biggest issue, isn't it? Hang on, I'm going to log into QuantBox, but I'm going to log into the back end. And I'm going to unlock something, an old tool, and I probably will release it. I just haven't released it yet. I just don't, it needs improvement, but hang on. Let me see if we can make sense of this. Maybe this will backfire on me. Hang on. Loading, loading, loading. You can't see it, of course, but hang on. Just hang on. That means hang on. Okay, page, manage pages, fundamentals, inflation. Oh, what? Oh, I know what I did. Hang on. So funny. I have to do the whole process over again. One bad click and you got to start all over. That's not fair. I guess I'll just have to view it, rename it. Oh, I have to let. So complicated. Sorry, everybody. Hang on. I have to unhide something. Show in view mode. And I guess it'll work now. All right. View mode. All right, so I unlocked this. I'm going to lock it back up. I wanted this one. Okay. And now I've lost the stream. Oh, there you are. Okay. Hang on. I lost the chat. Where'd the YouTube stream go? Okay, there it is. All right, so I unlocked something, and this might be coming to QuantBox Pro members. Okay. Kind of pretty, right? I mean, I guess I could release it. This has been, we completed this a long time ago. Anyways, here's the point that I wanted to make. Because somebody asked, I guess it was Richard. Richard said, technicals are working because fundamentally gold should be up. Well, think of it this way. You buy gold because inflation is rising. So inflation was rising in 2021. Inflation's going up, inflation's going up, inflation's going up. January 22, inflation's going up, inflation's going up, inflation's going up. And then inflation globally peaked in October of 2022 and then started falling. Now, notice that that's exactly when the stock market started to rally. Oh, snap. Okay. So the UK still has way too much inflation. Look at that, 8.7. The US is at 5, Euro is at 7. Canada is 4.5. Okay, so on and so forth. Amazing. So this is inflation falling. You don't need to hedge inflation if inflation is falling. And of course, if you want to see where we are historically, add a few more years. Okay. Take out the 70s. Let's go to the 90s. Okay. We have a lot more than we normally do, huh? Look at the 2008 financial crisis, huh? The world, the US and the UK were at like 5.5 and 4.5. Euro was at 4. And we're double that now. Okay, cray. So would you find this stuff helpful? Should I release this to pro members? Here are bond yields globally. Do you care? They're not perfect, and I want to improve these things. Okay, you see, GDP is falling. Yeah, really? Yeah, see, the problem is they're not perfect. They're not perfect. You know, so you're like, what's GDP in the United States? What's GDP? Okay. Now, does this matter? Well, like, think of it this way. Let me delete this. Let me move this. Okay. What does this mean? Huh? Recession. Euro. Recession. Previous and current, negative. Previous and current, negative. Already in recession. Now, maybe people are telling you that, but you don't need to be told. You already have the tools. You tell other people. It's you that walks the street and saying like, oh my God, don't even get me started with Kiwi and Euro. They're in recession, according to my research. Anyways. All right, well, I guess I could leave that for you guys. Stock market's coming down. Okay, I'll leave it there so pro can have it. But I got some pretty killer stuff on the way that might make it even better. Yeah, Jim says very little in life is perfect, right? Yeah, it looks good now. I learned. Do you guys know Guy Kawasaki? He used to work at Apple right before I did. I went to Apple. I don't know. I suppose right after Guy would have left. Very interesting dude. Because the Silicon Valley was very IBM back then, so it was ugly machines, ugly code. People wore ties to work. Honestly, I knew someone at IBM that when he went to work, he had to wear a tie as a programmer. So anyways, Guy Kawasaki, he wasn't the vice president of marketing. He was an evangelist, an Apple evangelist. And it was pretty cool. And anyway, so I've met him, I don't know, 5 or 6 times over the years. And one of the lessons that he taught me was ship first, test later. Another one is if it's better, so let's say you're making toilet paper. He's like, it doesn't need perfume. It doesn't need pillows. If everyone's using leaves, okay, then brown, rough, toilet paper that's like butcher paper, right? Let's say brown butcher paper is better than a leaf. And then you find softer, more comfortable butcher paper. Better than a leaf, better than the old butcher paper. And then you're like, well, let's bleach it and make it white. Why? I don't know. Okay, so on and so forth. And then one day it gets better and better and better until it is scented and it has pillows. Now, I was in the, what was it, the United Nations? No. Where was I? I was in Sweden, I think. Some international organization. I can't remember where it was. But anyways, it was really interesting. We were asked about various things, and I don't need to get into it. But basically, as international diplomats, we were asked things like, do we care about the environment, and do we care about this, and do we care about that? And then, and of course, everyone's yes, 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 I care about the environment. And then it was one of these things where you click a button and it's polling the whole audience. And then after answering, yes, we care about this, then it's like, how many people use bleached and scented toilet paper? And they're like, why do you need white toilet paper? How does that even make sense? Right. So anyways. Okay. So anywho, so maybe it's not perfect, but it's better than nothing, right? Yeah. Okay. So as I was showing you, in a disinflationary period, you could favor down on gold. And it's so weird when you hear people talking about, dollar's going to be worthless and gold is the new realm. They're probably right. I would agree with them that certainly in 1,000 years that'll happen. Maybe even in 100 years. But you have to talk a little more rational about, about these things. And so a disinflationary period is down. So, right? So anyways, is what that shows. And notice that there's changes in policy too. So if the Fed pauses, maybe they believe, or maybe the market is interpreting that as, the end of inflation. So anyways, whatever. Make a decision. Too easy to just say buy it to hedge. You're like, to hedge what? Do you really need to hedge inflation if we're going into recession? All right. So Bitcoin hitting target, oil doing its thing. It's okay. Still stuck in the range. It's not very exciting. Ashish says, yeah, the author. Well, when I met Guy, I think he had just written his first book. And if I remember, it had to do with smiling. Oh, no, wait. Of course, no. He had marketing books too, right? Anyways, I have a picture of him and I somewhere. I thought he was a really interesting dude. Guy Kawasaki. He's a really interesting dude. Yeah, he makes me smile. He literally wrote a book on the importance of smiling, and I try to do it. I just am a bitch. I'm a bastard. But yeah, he's written a lot of books now, right? The Art of the Start. Yeah. Chantman, The Art of Social Media. Oh, okay. He's still a prolific writer, huh? Yeah, so he was at Apple in the early days. Rules for Revolutionaries. I think I own that book. He might have given it to me. What's the year of that? I bet you he gave that to me. What year is this one? I bet you it's. I don't even know what this additional author. 2000? April 2000. Huh. The Capitalist Manifesto. Huh. Anywho, very, very interesting dude. Do you guys remember the Red Herring magazine? I don't even know if that's going to be around. Sorry for the walk down history. Red Herring magazine. It's old. It's out of business, of course. Is it still there? The Red Herring. So someone brought it back, huh? Interesting. So it used to be a magazine. Funny enough, it was owned by venture capitalists, and they would just self-promote their own startups. Okay. Anyway, so we're stuck in the middle here. Stuck in the middle. Where's my wife and family? What if I die here? Who'll be my role model? Bone digger, bone digger. Okay. Oh, what happened to our Ripple? Okay, Ripple got crushed. Was it the legal stuff? Not the SEC stuff, but the other stuff, the lawsuit stuff. Is there an update on that? An unfavorable ruling for Ripple? Solana is going to be very much negatively impacted about what Gary Gensler's doing. Oh, I can take a trade on Bitcoin if we're trying to figure out. Hang on. What if I die here? Who'll be my role model? Day. Which one do I want to put? I guess just Confluence, right? All right, so you want to see Bitcoin. So let me open this up. And I'll sell some Bitcoin. Boom! So $1 to cover my spread. Well, there's not even a spread really, is there? Roly-poly little bat-faced girl. He looks round, sees angels in the architecture, spinning infinity, singing, amen, hallelujah. Cool. So there you go. There's your answer. Can I trade it with $100? The answer is no. If you only got $100, no. Don't even trade. I would save your $100 and I'd go to night school. Do an online course that's free. Spend the next 2 years getting a degree in economics and finance. Okay. Save your money. Get a second job. Save your money. I mean, humans are so strange. Put it this way. Do you want to know how to make millions of dollars? Put money into your retirement account every month throughout your life, and you will have millions of dollars. And then people don't do it. Oh, yeah, they want to be rich. They want to live the good life. But when people are 30, they want to go to fancy bars, wearing fancy clothes, buying $22 martinis. They want to have a fancy watch. Okay? Look, I'm wearing a gold watch. Huh? Is it pretty? It's pretty. I'll go full webcam. Look, it's nice, right? Gold watch. Oh, you can't see it, right? Cool. You know what? Didn't own it when I was 20. Didn't own it when I was 20. Didn't drive a Porsche when I was 20. Or when I was 30. Or when I was 40. Okay? If you want to die rich, you save your money. You know what I mean? But this idea of and I'm not saying this is you, Richard, but I'm just grabbing onto this point of a lot of people say, well, I ain't got no money, so I'm going to gamble it so I can make a lot of money. But the whole thought process of that leads to poverty. It's a poverty trap. And then when you meet self-made people, you will discover they worked very, 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 very hard their entire life. And they made good, wise decisions along the way. So I was just watching an interview now of a guy who lives in I don't know, a 2-acre mansion in Beverly Hills. And he says he has rich friends. And the interviewer's like, wait, I thought you were rich. He's like, no, I'm the poorest guy I know. He's like, I'm probably the poorest guy in Beverly Hills. He's like, but I know multiple buddies of mine are billionaires or very, very close to billionaires. And he's like, one of my best friends, he and his wife are attorneys with very, very high levels of education. And they do real estate. And he's like everybody else, these people are the hardest working people that you can imagine. The only thing is all the very wealthy, and like he's saying, he's only got $100 million. He's the poorest person he knows. But he's like the self-made people. I mean, sure, in America you get rich most often from inheritance. So maybe that should be your goal. Making your great-grandchildren filthy, stinking rich. But the mindset of making you rich now as quick as possible is what leads to poverty, right? So anyways, what I'm trying to say is over long periods of time, money accumulates. So making a lot of money quick is the idea of rich. And rich is for poor people. Rich means you make a lot of money, but it just comes and goes. So let's say you decide you're a young person, you have a career, you're making $200,000 a year, but you have $100,000 in college debt. You're driving a BMW, you wear a $500 suit, you got yourself a $5,000 watch, and you go to the bars on the weekends and it's models and bottles. And you're like, yeah, but I make a lot of money. And I'm like, yeah, well, you're poor, right? So again, so this idea of making a lot of money is not the goal. Saving and investing long-term and compounding. So going back to the Guy Kawasaki and startups. So after he was done Apple, he started something called Garage Ventures, I think it was. And so he became a venture capitalist. And so back then, when you invested into internet startups, the thing is to take a good idea, build a product, and then scale. Scale. Go from 100 customers to 100 million customers as fast as possible. Didn't matter how much money it took, right? Just scale. And what you want to do with your personal finance, like if you only have $100, you need to build wealth. And you're like, but how do I build wealth if I don't have any money? Well, you got to change the whole mindset. It's not about making a quick buck. Turning $100 into $1,000 will just lead you to turning $1,000 into $0. Just the mindset, right? So you know what I'm saying? Like, to build something that is valuable, I would take the $100, save it. I would get a second job so you're not so undercapitalized. So now you need to work hard nights and weekends, having 2 jobs, and you save all the money from the second job so that one day when you're educated and skilled, you won't be undercapitalized. Or when an opportunity comes, you'll know how to analyze the opportunity, plus you'll have the capital resources to invest conservatively, not gambling. You want something to lose. See, people with nothing to lose it all. So you want something to lose so that you're like, well, I want to think about this investment opportunity wisely. Now, the second part of the value creation is the education. So when an opportunity comes, you're like, you can create a plan. You can do spreadsheet analysis. You understand things like, if it's a bond or real estate, you're like, well, let me do some discounted cash flow analysis to come up with a valuation on this property. And then I can make projections from that. So you can do the math, right? Or in Forex and in futures and in stocks and stuff, you're doing like risk-adjusted performance analysis to making sure that you're getting paid enough relative to the risk you're taking. And all of a sudden you're thinking on a whole different level. And so when I can tell you, especially you young folks, if you're, let's say, 35 or less, you have the opportunity to virtually guaranteed, not guaranteed, but reasonably certain of retiring a multimillionaire. You have to save now. So you're like, you don't buy a new BMW if you're 35. What the heck are you thinking? Well, I'm a success now. I make $200,000 a year. You're burning money and you will die poor. Despite how much money you make, who cares about that? So instead of buying a new BMW for $65,000 and putting that on debt, why can't you buy a $25,000 BMW with cash? Well, I ain't got no cash. Then you can't afford a BMW, son. Okay? Okay, right? You see? And so instead of burning that money, because you're like, dude, why are you making a big stink about this? It's only $550 a month. I make 12 grand a month. I can afford a $550 a month payment on my BMW. And then I'm like, well, let's think about that for a second. What if I told you that $500, $550 a month compounded for 35 years is $2.8 million. Actually, it wouldn't be that high. It'd be like 1.3 million. And you're like, wait, what? I'm like, yeah, if you just saved that, bought a car you can afford, and you put $550 a month every month into a retirement account that compounds somewhere between 8 and 10% a year for the next 35 years, your pathetic little BMW 3 Series cost you $1.3 million, and nobody thinks you're a baller. But you are throwing away $1.3 million. And if you thought that way, holy smokes, right? So anyway, so going back to Richard's like, look, if you only got $100 a month or $100, should you buy or sell some Bitcoin? No. But I want you to study these markets. Take a second job. Save. Maybe in a year or two, you have 10 grand. And take an economics course. Do economics, then do microeconomics, then do macroeconomics. Take 3 economics courses. And so like, let's say 18 months goes by. What have we learned? First of all, you know a lot about economics. 2, you know a lot about trading. 3, you're capitalized. And 4, you have a track record of success. You're like, what do you mean a track record of success? You're a tough mofo. You're tough enough to work 2 jobs. You have enough discipline to save all your cash. Vacation? No. Vacation's for poor people. Right? Fancy car? Boom. That's for poor people. $25 drinks? Boom. Poor people. Save your money because then you're rich. Okay? And virtually guaranteed, right? So anyways, and the thing is, you have the patience, you have the discipline, you have the long-term goal. You're just and by the way, it's that attitude which might be the most important thing of this whole lecture, because I know it comes across as a lecture, but it's that attitude that will probably lead you to success. Okay? You know what I mean? Like, how do you go from, no money to down the road, big money? It's that attitude. And we all know it's not the get rich quick people. Right? You're going to turn $100 into 3,000, or to 300, 300 into 900, 900 to 5 grand, 5 grand to 25 grand. And then pretty soon, boom, you're flying in jets and you got Rolls Royce cars and, no. Okay. So I'd like to think of it like, yeah, I am wearing a fancy watch, actually. Just happen to be wearing it. Looking at it. It's not too fancy. It's not a Rolex. It's a Tag Heuer, right? Cool. 14 karat gold. Nice. Gold bracelet, gold band, gold bezel, gold everything. Sweet. It took me 30 years to own it. Took me 30 years. Took 30 years. Yeah. So that's all. Huh? Took 30 years. Okay? So, and I know that you can work nights and weekends. You can take 3 classes on economics. I took 60 classes at Harvard, 5 grand each. Right? So anyways, right? Jordan says, I own 2 small businesses, one water treatment, one Forex trading. Yeah. That's very interesting, Jordan. When I was in China, I went as a business envoy. So I went as a venture capitalist and as a Forex trader. So this was 17 years ago, I think. But I met the governor of the Sichuan province and the mayor of Chengdu and both their teams. It was just, I was with a group of, I think there might have been 8, maybe 10 of us at the most, probably 8. And then them. So it was a private lunch and private presentation. They gave us a tour of all the stuff they were investing in. But they were very, 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 very interested in water treatment. One of the most important things for them was water treatment. I'll give you another example because we were at, it was before lunch and we're hanging out with these government representatives. And people on my envoy were asking them questions, and then they would ask them questions. And it just seemed like disorganized. Like people are just babbling like I'm doing now. I'm like, I don't understand. Why did this idiot ask that question? Why did that guy ask that question? Like, it just seemed pointless. And I'm always trying to figure out the thesis, right? So finally they're like, Mr. McDonald, do you have any questions? I'm like, actually, in fact, I do. And I lean forward and I look straight in the governor's eyes. I said, why are we here? I'm like, what's the point? We have come from all over the world, mostly the United States and Canada, a couple guys from Europe, and we're here meeting with you. And you're doing all these amazing things and making all these investments, and everything's impressive. So I'll ask again under that context, why are we here? What is it that you want from us? Which is an amazing question, in my humble opinion. And he looked at me and he said, clean energy, clean energy, clean energy. Yeah. And one of the points of the clean energy was to use that clean energy to produce clean water. And so really, they need power, they need water, and the rest they don't really care about. So pretty interesting. That's your side hustle. Some water treatment. Very interesting stuff. All right, let's do some yens. Yen. All right. So as I've already pointed out, there's some vulnerability with the Japanese stock market. I drew this Friday of last week or Monday of this week and showed you the potential for the head and shoulders. And now it's almost fulfilled. Look at that, folks. Now, if this heads down, the yen pairs will come down, or likely come down, and that hasn't really happened yet. Okay? Oh, funny. If you watch the Quant Box video, I point this out, except that hadn't happened yet. Oh, yeah, see, turn your head and cough. You missed it. Okay. Anyway, so it dropped and your opportunity has come and gone. Oh, gourd. Yeah, pretty amazing. Wow. Cool. And this is despite the Nikkei falling. So this wants to keep going up, so it looks. Lots of orders sitting there. You can see as soon as we hit this zone, orders. Oh God, as Kanye would say. Here's the one I guess I missed it. For some reason I thought I was on this trade. And then apparently I'm not. But anywho, up, 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 down, down, onto the 21 roll reversal. Easy peasy lemon squeezy. And the idea is up, down, and up. Or the whole thing's going to collapse right here, right now. But I don't know about that. Okay, so that's kind of interesting. Kitty cat, there's a nice commodity play. Zoom in a little bit. Okay, so I'm using the top here as support. A seven nation, Okay, see that? What would the target be in this situation? And yes, it's kind of a moo trade, although moo trade's for day trading. It's kind of like a monthly moo. Roderick says, what about for us 45 or more? Well, the hedge fund that I'm putting together will help with that. And it'll actually have two funds. Okay. Now let me redraw this. Okay. There'll be two funds. Growth and income. Terrible. Sorry. Income. So this is, right? For people that are less than 70 and for people that are more than 70 is how I would look at it. So if you're, let's say, 52, you would put your money into this bucket. Oops, I want to do this in a different color. You put some money into this bucket, Roderick. So if you're, what did I say, 52, I'd hope you'd have at least 500K by now. Okay? If not, you really need to get going. And you should contribute, what, 20%, maybe 30% of your annual income. So if you make 100,000, you should be putting 30K into this per year. So let's just say 3K a month. So 36, right? So you're putting in 3K a month. And you're like, oh my God, that is a lot of money. Well, that means your expenses are too high. The cool thing about all of this is it's just math. You can figure out all of this on your own. You're like, well, if you add up my house payments and my car payments and my credit card payments, I don't have $3,000 left. Well, your house is too big, or right? Your house is too expensive. Your car is too expensive, and your standard of living is too expensive. So when you're too old to work, and this is the whole difference between rich and wealthy. When you are too old to work, you won't have any money and your life will suck. Because you're used to this artificial standard of living like you're rich, or like, you know, like you're right. So you have all this money and you're just burning it as fast as you're earning it. And then you're too old, and now what? Now you got to live in a 200 square foot tiny house in a bad neighborhood. Right? You can't afford to live a comfortable life. You have to, compared to the way you lived, okay, you have to dial everything down to poverty levels compared to your expectations. So that whole process is, yes, get a smaller house, right? Don't lease new cars, buy old cars and save the $3,000. Your goal should be the $3,000 a month. That should be your number one goal. And you put it into here. Now, my fund is interesting because most of the time when you throw money into stock, you're in equity, right? Equities. They're called equities, stocks, right? So what happens is you buy a stock. Okay, you buy a stock for $100, and let's say 5 years later it's worth $150. But it didn't compound. Meaning you didn't get paid the $50 over time, so that your one share turned into 1.5 shares. You still just own the original one, but you could sell it for 50% more, but it didn't compound. Again, it's this idea of rich. What you want to do, my definition of rich is it's just money. Money's trash. So you have to turn money into wealth. Now, what is that? Your money makes more money, therefore you have more money, and that more money makes more money, therefore you have more money, and that more money makes more money. And has nothing to do with you. Has nothing to do with you. So what I attempt to do is then say, I don't really care about this $50 in paper money. Remember, it's paper value. You would have to sell the stock you bought for $100 to get the $50 you made, but now you don't own the asset. So now you're out. It doesn't compound. You didn't get to spend the $50, nor did it compound so you can buy more of the stock. So instead, in 5 years, you own 3 shares instead of 1 share. No, it doesn't compound. Your money doesn't make more money so that more money makes more money. No, you made one good investment of that one stock, and it went up and down in value on paper, but you couldn't eat it. You couldn't live on it, okay? So what I want to do is say, well, let's buy that same $100 stock, but using things like derivatives, I can take that $50 that it's made and put it back into here so that you own more of this, and then it goes up a little more so that you can take that and buy more, and then it goes up. And so by the time you get to 150, the old way of investing is we have 1 share, but under my more modern way of saving for retirement, now you have 3 shares. Why? Because I've taken out the income to buy more, which generates more income. So then I own more shares. So I take that new income and I buy more shares. And I take that income and I buy more shares. So that by the time you get to 70, your net asset value is huge. Because you've now compounded. Because you're taking the paper wealth and reinvesting the income into more assets. More assets, more assets, more assets, more assets, compound, 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 compound. And then, of course, my goal is once you're here, so let's say, what are you, 52? So by the time you hit 70, your 500K is, let's say it's worth, I don't even know, it's a reasonable number. Double that is $1 million. So let's say it's now 1.2 million. I'll just make up a number. Okay? I'll probably pay you $10,000 a month until you die. Is that the goal? to know that when you're too old to work, $10,000 is going to be put into your account every single month that you can live on? And then when you die, you'll still have 1.2 million? It's an amazing concept, isn't it? Yeah. So the thing is, the hardest thing, and of course, I'm not your financial advisor, nor do I want to be a financial advisor. I would never want to be a financial advisor. Because like being a YouTube guru, nobody listens to you. So anyway, so it's more like, dude, just give me your money and I'll do it. I'm not going to advise you. I don't know you. I don't care about you. I don't know your past history. I don't care about your investment goals or whether you need to send your kids to college. Dude, I don't care. Because ultimately, and I know a lot of financial advisors, nobody listens to you anyways. So like, whatever. So I'm not going to create a retirement plan for you. But the big issue is like, what do you do if you're 52 and you don't even have 500K? You're like way behind. Then, yeah, I would recommend that you sell the house, sell the car, sell the watch, sell the TV, sell everything. Right? Get two jobs and focus on getting some money into here. That's your starting principle. Then you got to drip more money in every month, and I'll help it grow. Grow, 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 grow. And the cool thing about a retirement account is you can't touch it. You don't get to spend it. But you will be wealthy because probably for the first time in your life, money works for you and money never sleeps. Your money will make more money, which makes 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 more money. For the first time in your life, you'll be wealthy. You're like, but Wayne, it's only, 100 grand. It's only 200 grand, whatever you start with. Yeah, but the difference between wealth and money is wealth makes money while you sleep. Money just gets burned. So watch yesterday's video where we talk about the difference of flipping houses and making 50 grand a house. There's a poverty trap to it. It never compounds. As soon as you sell the house and you make 50 grand, great. Now you got to go find a new house and do it all over again. Well, shoot, that's a lot of work. And then you got to find that property and you do all that and you do your flip and you make another 50 grand. It's just, it's very short-sighted. And it's a lot of work for not a lot of money versus owning an apartment building that just produces 50 grand a year profit, let's say, almost certainly more than that, year after 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 year. You do one deal, right? I guess that's what I'm kind of trying to say. You don't want to flip houses and just have one-offs and make 50 grand, and then you got to, how often can you do it? 3-4 times a year? I mean, it's not a lot, right? But if you own an apartment building, it's income minus expenses minus debt service, and the rest is in your pocket. So yeah, you probably make the same amount of money as if you flip 3 or 4 or 5 houses a year, but you never have to work. Your management collects the rent. Your landscaper mows the lawn. And while you sleep, your apartment building pays you money. Meanwhile, the renter pays down the mortgage. So 5 years later, you need a new mortgage. The renters have paid down the mortgage by 10%. So you flip it, pull the 10% out and put that cash in your pocket. And now you got the same mortgage again. And you're like, wait, what? Yeah. The mortgage went down, the value of the property went up. So you flip it, you get a new mortgage at the same principal mortgage that you used to have before, but that it was amortized. So let's say the value of the property went down 200 grand. Great. So you bump it back up, put 200 grand in your pocket. Done. Once again, the only work you did was get a new mortgage. See? So anyways, it's all about compounding, guys. Your money has to make more money while you sleep. If you trade your time for money, by definition, you're poor. Even if you make $300,000 a year, you stop working, you're instantly poor, and that's the issue. You don't want to stop working at 70 and be instantly poor. You know what I mean? I think I overdid it today, huh? Too much of a lecture? Jordan, it depends on how you do it. Okay. So the issue with portfolio management, Jordan, is this. Actually, do you guys know who Jack Schwager is? Let's see if I can find his book. Nah, I can't find it. So you know him from Market Wizards. Before that, he was an analyst for a firm that invested into commodities trading advisors. So he would analyze performance of hedge funds for a fund of funds. And he'll tell you that his analysis of tens of thousands of investment, into hedge funds is whatever is working now won't be working soon. Okay, Jordan? So you never invest into a winning hedge fund, but the losing ones might be a good opportunity. And you're like, that doesn't make any sense. Well, whatever has been the thing has produced the good results that you now see in the winning hedge funds. But almost certainly, now that you've observed it, so let's say interest rates rising created a scenario where maybe a hedge fund made a lot of money, but then when interest rates are hit terminal rate and then fall, that whatever their strategy was is no longer a strategy that will probably work. And some other firm that you're not looking at will have a strategy that does better in falling interest rate environment. And now suddenly they're the winning horse. So I want to say that because it leads to the next thing where, so in my portfolio construction, right, you might want to look at the year like this. Okay? And then inside of that, there's a bigger business cycle. So this is seasonality, which is what typically happens throughout a year. And then how about something that happens per decade? So there's different cycles, right? And so it's not like, so you asked about creating faux dividends by doing covered calls. Well, that's good in certain periods, but not so good in other periods. So if you break this into Q1, 2, 3, and 4, and you look at seasonality, okay, you might get something like this for the stock market. Okay. Meanwhile, there's this bigger cycle, and then there's super cycles of cycles. Okay. So it's not like the covered call itself. What is it that so you're creating an option and selling it to somebody else. So which options are you creating to sell, to mimic a dividend? And if you don't understand, like, let's say the seasonality of the pink cycle, or where we are in the overall business cycle, you're not going to make the right decision of like, what are you covering? So like if we go into this period, I'll probably write some options, in this case, sell some options against the VIX. Oh, why would you do that? You might ask. I expect volatility to fall if there's a rally in the S&P 500. Well, how do I know there's going to be a rally or not? Well, that's my job. Now, if you weren't so sure, if you're in a period like this, okay, sort of a lull, what could I trade? What could I buy? A covered call, remember, means you own an asset, then you're selling an option against the asset. And then what about here? Okay. What you're doing is not just a covered call strategy, but you need to shift and engage and rebalance assets that you actually own based on this cycle to buy the right assets at the right time. Right meaning right time. And then when you have that, then you can write an option and sell that option to somebody else. And so like the covered call, sure, but what's working, let's say in this period, will not work in this period. And if you don't get that right, you're going to underperform. Yeah. And so like the covered call part is easy. But what asset class? Okay. And then very often people are doing the wrong covered call strategy. So they're owning, I'll make up a situation. They're owning Apple and then doing a covered call strategy. Yeah, but Apple's an explosive stock. You would not do it against Apple. Because the whole point of owning Apple is it's going to double in price. Well, that would be a stupid thing to cover. Because what you're trying to do is think of it as a carry trade. You want low volatility stock. Okay? Is there another word we can call low volatility? Is there another word we can apply to that type of stock, that type of investment? If it's not growth, what is it? Value. Value. It's a value stock. Typically a mature company that quietly just churns out profit year in and year out. So you see a lot of funds that are doing covered calls on like the NASDAQ type companies. It's not a smart idea. And you're like, why is it not a smart idea? It produces income. Yeah. But you could have just not covered it, and then your NASDAQ stocks might be up 30%. Meanwhile, if you did a covered call, you're only up 12%. So if you're going to own those, you should let those winners run. You see? You're like seriously, right? So some people are doing the right thing on the wrong assets, but they do it for a reason. And the reason is it's a product somebody's going to buy. So if you're out like raising money and let's say you do a more appropriate right thing and you're like, we're going to do a covered call strategy on stocks that are listed on the Dow. And they're like, we're not interested in the Dow. We want some NASI. We want some NASDAQ. Everybody wants to own NASDAQ. Can you do this on NASDAQ? And the fund manager might be thinking to himself, that's a dumb idea. Why the hell would you limit your upside on an explosive growth stock? Why would you want to limit that? What's even the point? So you're thinking this, trying to comprehend what this potential investor is asking you, and you're like, I don't know if they understand. And then he says, if you could do this strategy on NASDAQ, we'd give you $100 million. And you're like, shit, yeah, of course I can do it on NASI. You know, he's still thinking to himself, it's the dumbest idea he's heard of. But dude, you got 100M? Yeah. So you just go back to the office and you're like, boys, scrap this whole covered call strategy on the Dow. We're going to do some NASI. And they're like, NASI? And you're like, yeah, we know. Yeah, sure. He wants to, because understand what this is. Now, Jordan says create a faux dividend, which is true. So you sell an option. When somebody buys it for you, they have to pay you for that right. Sweet. So that's income. Dividend is an income. So do you care if it's a dividend income or a derivative income? It's a faux income? No, probably not, right? But a covered call strategy is a hedge. So if you're like, dude, do this covered call strategy on Apple, what you're telling me is you don't want most of the upside. And you're like, no, Wayne, that's not what I said. I want all of the upside, but I want you to earn income too. Well, that's not how that works. It doesn't work that way. So would you give up 50% of Apple's growth? In this case, it's, let's say the stock doubles. How much are you willing to give up to make 1% a month? And what if I told you if the Apple stock doubles, you'll get about 40% and you'll give up 60%. And you're like, wait, give up 60% of the upside? Yeah, for 12%. You're like, wait, I have to give up 60% to earn 12. Yeah. Do you feel comfortable with that? You're like, hell no. Then it's the right idea, wrong strategy, wrong asset. You see where I'm going? But you got to be careful, Jordan, because, most people don't know what they want to do, especially people with lots of money. Just get me into crypto, anything crypto. If it's blockchain, buy it. Now what's everybody doing? Something AI, buy it. Uh-huh. Usman says, which is the better long-term investment? Well, if you'd been paying a little more attention, the speech I've given for the last hour and a half, it seems like an hour and a half, is about income. Bitcoin pays zero income. Gold pays zero income. So it's almost dead in the water right away. Now you're like, right? Jordan says, yeah, I got you. Timing and the right choices of stock. Well, that's the whole thing. You have to be a brilliantly talented portfolio manager or fund manager, right? And to know how to pick the right horse at the right time, but even more importantly, when to get off that horse and get on the next horse. So I'm not talking about horse racing. I'm thinking of Genghis Khan and his armies going across the plateaus at breakneck speed. The horses have been galloping for 2 hours straight. Their nostrils wide open. And they come up and there's another 100 horses already waiting. And as they approach those horses, the people that are managing the horses get those horses at gallop. And then as Genghis Khan's army, their horses are now, their hearts are exploding, but they're still at full gallop. Meanwhile, the new horses, they just got to full gallop and they change horses in full stride. Like an Olympic relay team passing the baton. They just switch horses, and now the new horse is fresh, and they continue galloping at full speed. Knowing when and where to do that, and what horses, yeah. And that you even have a plan like that, so that your enemies can never catch up to you. Because your enemies are trying to get to you, and they have to stop every 2 hours to relax their horses, calm their horses, water their horses, feed their horses. Meanwhile, Genghis Khan's still at full speed. You'll never get him. Will gold hit 3,000? Yeah. In the next 100 years, I'm certain of it. So you can see that I'm cynical, Jordan, but I know that's how the world works, where it's an interesting strategy that's out there, and very few of them are actually deployed properly. Okay. So, like, for example, my job when I finally am able to launch my fund is to focus on that portfolio construction and rebalancing often, probably quarterly. Okay. And probably 1 month before every quarter. So I shift everything. So I don't wait till January 1st. I've already made those decisions early in December. And I don't wait for July 1st. I made those decisions early in June. So really, I shift. So if we go back, a typical year for a typical fund manager is Q1, Q2, Q3, and Q4. Now remember, typical is mediocre. So my typical year would look more like this. So when other fund managers are starting the new quarter and doing their rebalancing, I'm 3 weeks ahead. I've already done it. Why? Because I'm better than the best. Best believe I'm the baddest. Yeah. Okay. So young guns, young fellas, Don't dream of the fancy cars. Don't dream of the fancy watches. Don't dream about models and bottles. If you want a fancy watch, a fancy car, okay, a beautiful house in a beautiful neighborhood, okay, you can have all of it. Absolutely. Just not when you're young. Okay, so when I was in my 20s, I slept every other day. I worked 7 days a week for, I don't know, forever. I don't know, forever. It's like you should know that these are the years that you're supposed to be doing it. Do you think it's going to get easier when you find someone more beautiful than you, but they laugh at your jokes and you're like, oh my God? Okay? Pretty soon, you got a ring on your hand and baby's in the pram. And it doesn't get easier. So if you're a young gun and you're a big dreamer, oh my God, you can totally do it. But now's the time, young guns, to work your ass off 7 days a week. And I'm telling you, I am not even joking. Sleeping is a privilege. Ideally, you get a few hours a day. But that was, okay? But it's not necessary. But you can do it when you're young. But the thing is to have a long-term vision, a business plan, and own a business. That's where all your investments are going to go into, is yourself, your business. And it should generate money. And then what do you do with that money? Take your 10, 20, 30% out, put it aside in your retirement account. So when you go to the bar with your buddies, you're like, well, I'm not going to drop $1,000 tonight at the bar. When you're at Sam's Club or Walmart or Best Buy, nobody goes to Best Buy, but just for fun, and you see that TV on sale, you're like, man, look at that. You don't need a $1,000 TV. It doesn't make you any money. And I want you to be the type of person, especially when you're young, because it's most important when you're young. You look at that TV and you're like, dude, that's a $2,000 TV that I can get for $899 right now. And you're thinking about, all my buddies are going to think it's cool. We can watch the Super Bowl. This is going to be epic. I can watch movies. It's going to make me so happy. No, it's not. But if you knew that if you just saved the money, and remember your goal is your $3K a month, so that was part of your $3K a month. If you really were putting $3K a month, you can't afford it. You want to be in a situation when you're shopping, you can't afford anything. Well, guess what? You don't need all that crap. Your home should look like a museum. I've had kids, they're like, where's your TV? Oh, we don't have a TV. Where's all your stuff? There's nothing on the walls. There's nothing on the nothing on the bookshelves. Yeah, it's all in the bank, son. Okay? You want to put yourself in a situation where you ain't got no money. You're like, $22 for a martini? Well, okay, maybe a few times a year, but not every weekend. You see what I mean? And here, right? And you will become wealthy. You will. And I want you to think about that. The value creation. How can you create more value? Think longer term in your trading and investing. Scalping's fine. Day trading's fine. But if you want to get big, I want you to think, how do I scale this? You don't want to be a house flipper. You want to be a real estate tycoon, a portfolio of apartments. Not flipping one house at a time. You're always a portfolio of one. No. I want you to think about how can you create value with your money. Well, if you don't have a lot of money, focus on creating value in your worth. How do you increase your worth? Education is helpful. You're like, well, it's just it's just a certificate. It's just a piece of paper. It's worthless. If you can't analyze, if you can't think critically, it ain't going to work. Okay? This is a tough gig. It's hard to be a professional investor and not be that smart. Okay? You might want to try Instagram modeling or Amazon drop shipping. It helps to be a little bit smart in the world of economics and finance because you're trading against very, very smart, highly educated people. So do you have to be a genius? No. But wouldn't it be helpful if you were the type of person that said, I value the education. I want to know more. I see his point in economics. I think I'd like to study that some. Finance, what an interesting thing. His discounted cash flow model and his capital asset pricing models seem very interesting for predicting the future value of the stock market. I think I'd like to study that. So are you inquisitive? Do you have the discipline to do it? Are you willing to give up Dancing with the Stars to do an online course doing macroeconomics? Well, I think it's the attitude that kind of creates the destiny, isn't it? Okay? So, we were saying earlier, turns out your net worth is related to the net worth of the people you surround yourself with. So there's two things to do. One, find people in your community, near your community, that have a higher net worth. Talk to them. How do they talk? How do they think? How do they act? What do they do? What's in common? What's not in common? And the second thing, increase your net worth. Does a TV make your net worth go up? No. Does a car lease on a BMW make your net worth go up? No. Does $3,000 a month in a tax-deferred investment account that's growing exponentially, does that increase your net worth? Abso-total-frickin-lutely. Okay? And young guns that do like things like gold watches, I'll tell you what. One day you will own a bunch of real estate. And one day you will refinance one of your apartment buildings. And in that afternoon, you might make 300 grand. So you're like, should I buy a gold watch or a Lamborghini? It's all free money. It came from the renters. It came from the tenants. And you're like, it's no big thing. It's no big thing. You're like, cool, nice. Should I get this or should I get? And it's a nothing. It's a nothing. Because your money created more money and it's going to create more money in the future and it's a whole different thing. Okay? It's a whole different thing. Because your money is creating more money faster than you can spend your money. Now you can go get yourself something nice. Why? Because you earned it through deferred gratification. You earned it. And that's what people will respect you for. Okay? In my humble opinion. Hey, it's Thursday. If you're in my day trading group or my swing trading group, I'll see you at the New York close for our meeting where we plan out all of next week. Sorry for the speech today. I don't know. Maybe I'm tired. Maybe I've had too much coffee. I don't know what's going on. I apologize. Okay? But please think long term. Please think of Forex as a business. Okay? It doesn't hurt to be the hardest working person in the room. It doesn't hurt to be the smartest person in the room. If you can do both, you can achieve your destiny. If you're patient, disciplined, focused, and good looking. Well, maybe not the last part, but boy, it helps. Yeah. Peace on earth. Huh? Peace on earth. May the pips be with you. May your profits be above average. I'll see you later, dude.